Hey guys, B Twice here. Tonight we're going to be looking at Apple. Today is Saturday, May 29th. I posted a video about this earlier in the week, but kind of where I see us is that we had peaked to the top of a wave 5. We had one, two, three, four, 5. So we peaked a few months ago before tech started to really pull back. Since then, we've been in a corrective sequence. I still feel like we are, as long as we are beneath this trend line and beneath all-time highs, um, the chart is definitely bearish to me. I'm going to go over why I see more downside coming in the upcoming weeks. I do think we're going to have a 5-wave move to the upside um, before ultimately hitting close to the trend line and then bouncing off it and then heading lower. So real quick before I go over all this, I'm going to pull up another window so we can go over a WXY correction, Elliott wave theory. All right, so in Elliott wave theory, there's a good website, Elliott wave forecast, you can go on if you want to pretty much just read anything about Elliott wave theory and try to understand more about it. But basically, one of the most common corrective sequences we see in the market today is this WXY corrective sequence. Basically, it's a 7-swing structure. You have 1, 2, 3, 4, 5, 6, 7. It's one of the best structures you can trade um, as long as you can get in around what is considered Y. The best sequences to trade in Elliott wave theory in general are 3, 7, and 11 swings. 3 swings would be a zigzag, which is just the A, B, C. So you could trade this here to get this pop up to X, and then just trade for three swings. A 7 is, like I just said, the Y. 11 would be a Z. You would just see an extension on top of this. With that being said, wave Y can be anywhere from 61.8 to 123.6 of W. So this is the length of W from the top down, and then you extend it onto X to figure that out. The most common is the 100%, which is what I'm about to show you here. All right, so now that that's said, we'll dive in a little bit here. All right, so basically what I'm seeing is that when I posted earlier this week, I actually was a little bit more bullish on how high Apple was going to get. And then after my count became invalid, I was counting this as a 1, 2. It went up and it pulled back a little too far, which made my count invalid. I realized that my wave count was likely off, and Apple is not going to go as high as I thought. So I closed my position and then evaluated where it was at. So what I'm seeing now is we topped out for 5. We came down for A, B, and then we have a 5-wave move down for a C, which gives us our W, like I just showed you in the snip of the WXY. Then you have an A, B, a C up, which gives us the X. So we have WX. Then we have a 3-wave move down for A. So we have an A here. A, B, we're going up for C. So we're going to see, anytime you get to the C wave, you generally see a 5-wave impulse. So we're going to get a 5-wave impulse that's going to take us up likely close to this trend line. We might even touch it. So we might see Apple get a break above 130. That's what I was thinking earlier this week, but then after the price action on Thursday and Friday, where Apple was just super weak, even though the S&P 500 was up, it made me think that it probably won't, but it still potentially could go up and touch close to this trend line. I do think it's going to get rejected right around here, and when it does, we're going to see a 5-wave impulse to the downside that's going to take us relatively low. It could take us as low as Apple 110. It could even be lower. I don't think it will get past 110. This would be a good buy point in my opinion. But until we either break above this trend line and consolidate, or we move down to the 110 range, I will not be touching this name. So um, there you have it, guys. If you like these videos, go ahead, subscribe, hit me with a like. Thanks.